All right, preparing our next statement, again with that corporate emphasis. That's why we're looking at the statement of retained earnings and not the statement of owner's equity. So if you remember back to your notes earlier on, we said on the statement of retained earnings, we simply show the change in the retained earnings balance from the beginning of the period to the end of the period. The only two items that impact this balance are net income and dividends. So let's see what this statement would look like. So preparing the statement of retained earnings. It's such a tiny statement compared to the other ones we're going to see. We're still going to have our three-line header, right? The who, the what, the when. You're going to start with your beginning retained earnings balance. If it's a new company, like it is at the beginning of this textbook, most of those early chapters, it's a new company. So you start with 0. Okay, so 0 if new company. We said this retained earnings balance is increased. Okay. Must be. Is increased for net income. Right, you're going to get that from the income statement. Get from your income statement that you prepared beforehand. And you're going to subtract dividends that were paid to the stockholders. Then, after adding and subtracting respectively, you're going to get your ending retained earnings balance. And that's all there is to it. So straightforward. Okay, $, double underline on that final figure. Just like before, just your first and last numbers get $. You're just working in one column for this statement because it's so tiny. Okay, and it's just these two items that are changing your retained earnings balance. Okay, let's go ahead and see an example with Kinney. All right, so back to Kinney. We're now on the second statement of retained earnings. So we said for the statement of retained earnings, we're looking for your beginning balance, your net income, and minus any dividends. Okay, we solved net income already. Dividends are usually given if any apply. There we go, dividends. Okay, and then we just calculate the ending. So let's put it into our beautiful format. There's your 3-line header. Notice it's the same, almost exactly the same as your income statement, just the middle line changes. Instead of it being the income statement, it's the statement of retained earnings. Let's get our beginning balance for retained earnings. Just double check. It's a good habit to double check. If there was a beginning balance, they give it to you here in the data. We don't see one, but also it tells us they were just incorporated. It's a brand new business. So if it's a brand new business, it's going to start with 0. Add your net income. Add net income, which again, we already did. So just bring it down here. 4490. Subtract the dividends. The dividend amount is given to you in the data that they provide. Looks like it was 1,500. You're going to subtract that. So put a line to calculate your ending balance. I'm fine if you just say ending balance, or you could say ending retained earnings. Either way is fine. $sign on this final number, 990. Yay, we made it through the second statement. In our next video, we'll look at the final statement that we're covering, which is the balance sheet.